brand new product, X10 Day Trading, okay? I just raised the price from 397 to 697. You know why? Because it's full of value and zero risk for you. Let me explain. But first, let's dive in. For whom is that? Basically, you are sick and tired of your 9-to-5 jobs like I was. Well, then this is for you. Or you just want to get a little bit of money on the side, a couple of $1,000s per month with day trading, with a strategy where you don't need to know technical analysis and where you watched only 10 videos to know the strategy that I used to 10x $2,000. Yes, in 1 month, and I did it twice just to prove it. I turned $2,000 into $20,000, okay? Even let's say you turn only with the strategy in your first month, the $1,000 that you risk in the beginning to $2,000, still the course is for free, okay? No risk. And let me tell you what comes with it, okay? A 30-minute call with me, you and me, plus an exclusive group that is coming only with this purchase, plus a second 30-minute call with me a couple of weeks later to see if you're going. So I'm holding your hand. It's super easy, super valuable, but obviously it's time limited, so 50 people maximum. Get in if you want right now. So welcome to a brand new stream here on my channel, and happy Presidential Day. I don't know how happy it will be in the next 24 hours because it's getting very heated on the markets and geopolitical situations. The Russian stock market lost almost 10% today. The S&P 500 and the US futures are down, so it's crazy volatile on the markets. And what you have seen in just the beginning, the 1-minute trailer, was something that I was working on the last couple of weeks and months. I actually went into day trading because, also into day trading because long-term investing is sometimes a little bit boring. So I tried things out. I developed a very easy strategy, and when you want to join, it's about $697, but it's really worth it. So check out the link into the live chat as well as the link into the description for those that want to take their trading on the next level. This is for you guys. So let's look into the markets. What happened to the markets, right? I am having here the S&P 500, which lost lots of percentage, right? I mean, this week we went from Wednesday was the highest point at 448 to 430, 430, okay? I really think that, you know, this is just the beginning, specifically what we see now in this geopolitical situations, right? It seems like there is really things heating on, but this is what we have seen already in the Russian stock market here. They are almost 10% down because Russia was obviously open. Today just the US was closed, so this is quite interesting to see that development, okay? And here you can see that actually the S&P futures are also down, okay? They are down already 1 percentage point, which is huge, guys, okay? Huge. I think that is really what is going on, and you need to be very careful. But those are the best way to trade on the market, right? If you're day trading, then I will show you a success story which is quite ridiculous. There is one guy who actually bought, let me just find him. He bought like 10 million worth of S&P puts. And obviously this worked very well for him. So let me just find it. Okay, so here we go. So actually, on the 7th of February, there was one person that bought S&P puts 10 million on 419, and he made apparently at least 50 million with that trade, which is crazy, okay? So here you can see the Flow scan app discovered this, and Gurgavan actually showed it to us. And then someone spent 20 million on these puts on Thursday and another 25 million on Friday. Looks like the same buyer to me. So this is absolutely crazy, guys, okay? There is someone that is really putting money that the stock market will go down. And, you know, this is, by the way, also something that I cover now in my latest edition of the X10 day trading. I will show you how to trade the S&P 500 and only the S&P 500. Very easy to learn. So, again, check out the new link into the description if you want to join. Follow me also on Instagram if you haven't yet. And make sure to smash the like button. And let me know in the live chat as well as the comments where you are watching from, okay? I want to make sure that you get also another thing, okay? There's another guy on the stock market. His name is Kolanovic, and he is maybe the most accurate person because he's the strategist of JP Morgan. He oversees the quants and so on and so forth. So it will be quite fun to see what his take is right now together with me. So he's actually thinking that the sell-off is over, which is interesting, which is very interesting. Let's have a look what he says, and let's listen together.
Listen.
Want to get your take on what's going on in the markets right now, because the gist of your most recent note is basically that everyone under the sun, from individual investors to CTAs, everybody is too bearish on this markets for various reasons. So what is happening now in your view?
So right now, today, obviously the sell-off is related to the Eastern European news and the crisis over there. So that's driving. That was also the case last Friday, you know. But most of the volatility over the last 2 months was driven by the Fed, you know. So you had this very aggressive repricing of the hiking path, sort of front-loaded hiking path. And I think that has largely upset the market. Add to that the crisis that we have in Russia, which impacted today and last Friday significantly the market. And what you mentioned, a lot of the capitulation from various investors, you know, so you mentioned CTAs, vol targeters, those exposures are down to basically around 10th percentile, so sort of 1 out of 10, that's where they are. So there was a lot of selling there as well. So we think it's a little bit overdone at this point.
So at this point, how are CTAs positioned? I'm asking because in the past we've seen a sort of a violent, I don't want to say correction, but when CTAs get over positioned in one direction, oftentimes that precedes a very violent and sharp correction to those positions. Are we going to see that?
You know, so I think we would need to market to creep up a little bit from here to perhaps recover the losses from today, and we would be then in the zone of some of these levels being triggered on the upside. Right now, these investors are largely short. You know, if you look at the NASDAQ, if you look at the small caps, you know, and even the significant amount in S&P was sold there. So basically their positioning is now negative. You know, if the market can recoup, let's say, today's losses, creep a little bit higher, which I think it will, then you could see the acceleration on the upside.
Marco, it's Sarah. Why do you think that this escalating conflict between Russia and Ukraine is not going to ultimately be a big negative factor for stocks when it seemingly only complicates the picture for the Fed, which is already dealing with inflation that's much higher than it expected, and now oil prices get even more elevated? Doesn't it just make for a trickier backdrop?
You know, it is a tricky backdrop, but really Fed cannot do anything. You know, if the oil goes up because of the war is not going to stop because of Fed. You know, if the wheat and bread, food prices go up, people are not going to eat less and look at the check at the Fed funds to check whether they're going to eat one bread or one slice or two slices. You know, so Fed really can't do much. You know, so basically, if you already have a tax, effective tax, which is imposed by, say, the war or commodity super cycle, you know, kind of adding one extra tax at the top of that by no means will help. And hopefully these economists realize that. You know, economists typically, you know, look at the models. They tend to be a little bit less focused on the markets and implications and complexities of certain situations like we have now, as I mentioned, with the geopolitical and some of the sort of structural commodity supply-demand issues.
And so it sounds, Marco, like you like commodities and that the Russia-Ukraine tension can only provide upside to those trades. Is that right, that you like it either way?
That's correct, and we have been very consistent in that for the last almost 2 years. I would say energy and materials for the better part of the 2 years were our picks, our top picks. Partially it's a super cycle, our super cycle thesis, which we talked about. Partially is again inflation hedging, and partially is also reopening. We do expect reopening from coronavirus in the spring and summer to be pretty strong. So also on the demand side, we expect positive news there for these sectors.
So, as you can see here, he is expecting us soon to be recovering. And guys, I'm in the same camp, okay? I like to understand the current situation and trade the same. So, now we are in the very oversold situation. Now, Russia and everything will happen some way, right? We hope not a war, but it will happen in some way. So, either it will be a diplomatic solution, then the market will bloom up, or there will be a war which should drag the market down. But latest then, in a couple of months and weeks, this will be all gone. So the market will have the power to recover. And then we will see what next is on the table. There's still the Fed mid of March. There's still, the question if we see growth in the economy or we rather go into the recession. So this will be question marks, but everything on the stock market is temporary, okay? It's transitory, basically, right? I mean, you are seeing, those moves on the market, and at some way and interesting ways into the new world that we're going every single day is reflected by the markets, and the markets price things in, okay? They will price in a very catastrophic situation within this Russian conflict, and then from there it will go up again, okay? And those are the best situation to trade out. And we hope, again, there's nothing, there will be a diplomatic solution, but at the end of the day, you are reacting to the things what happen on the market, and you should be well informed what it can be. It seems like tomorrow is kind of a red day. It seems so, right? No turnaround Tuesday. Monday was closed. So also the statistics showed us that maybe we will have a pretty bad Tuesday, but at some point we will have a turnaround. It's just how the market works. So the market doesn't go up straight the whole time down, and it will have recovery phases on the way. However, the bull market, the crazy bull market, is for now at least over, and I think the next 2 years will be fantastic to trade, and I think that this is something that you can check again with the link into the description. Check it out, maybe it's for you. Other than that, buy and hold will be something for the next 5 to 10 years for sure. So with that said, thank you very much for tuning in on this Monday. Have the best presidential day that you ever had, and make sure to smash the like button, follow me on Instagram, and I really love that you tuned in. Take care, and leave a comment what you think about the current situations, and I see you tomorrow. And guys, let me also shout out to people from Germany, Malta, Denmark, Moscow, Ukraine, and the Netherlands. And tomorrow, guys, if you are new here to this channel, or if you are a long-term investor, you know that I'm following space very closely. Tomorrow will be the earnings day, so stay tuned for the live stream. I'm looking forward to see that. So take care, and have a good night.